And it's a beautiful Tuesday morning right here at Lagos, Nigeria. Great to have you join us on Business Morning. I'm Ladi Williams. First off, let's take a look at what's in the news. We see total asset value of the global Islamic finance industry is expected to hit $4.94 trillion by 2025, with Nigeria expected to play a major part in its growth. The 2021 report released by the Islamic Finance Development shows that oversubscription rates for sovereign sukuk indicate continued to be in strong demand. According to the report, Nigeria and Egypt were the most notable among 15 countries that issued sukuk globally in 2020, and this comes after their absence in 2019. Meanwhile, major activities in the Nigerian Islamic banking space recorded major activities in 2021, which includes a fourth sovereign sukuk of 250 billion naira issued in December, which was oversubscribed by 865 billion naira. And the Organization of the Petroleum Exporting Countries have appointed Haitham Al-Ghais of Kuwait as its new Secretary General with effect from August 2022. Mr. Al-Ghais picked a virtual special meeting at the OPEC conference held will replace Mohammed Bakindo, whose second term as OPEC Secretary General ends in July 2022. Mr. Al-Ghais, a veteran of the Kuwait Petroleum Corporation and Kuwait OPEC governor from 2017 to June 2021, currently serves as Deputy Managing Director for International Marketing at KPC. Meanwhile, OPEC's outgoing Secretary General, Mohammed Bakindo, shares the latest outlook for the oil markets. Do take a listen.
In terms of the economy, the global GDP growth forecast for 2021 has been revised down slightly to 5.5% from 5.6% last month, while the 2022 growth forecast remains unchanged at 4.2%. Looking at demand, we foresee world oil demand increasing by 5.7 million barrels a day in 2021 and 4.2 million barrels a day, both unchanged from last month. World total demand in 2021 is now pegged at 96.5 MBD and at 100.6 MBD in 2022, surpassing pre-pandemic levels. In terms of the supply side, non-OPEC supply in 2021 is expected to grow by 700,000 barrels a day to average 63.7 MBD, unchanged from last month. For 2022, however, non-OPEC supply growth is forecast at a hefty 3 million barrels a day, or for an average of 66.7 MBD, also unchanged from last month. We continue to monitor the potential near-term impacts if some leading consuming countries carry through with their announced plans to release an estimated 7 million barrels from their strategic oil reserves.
And now for commodities market update, we see oil prices rose today as investors embrace expectations that oil producers will add supply at a meeting today as a sign that fuel demand remains robust despite the spread of the Omicron variant of COVID-19. Brent crude futures gained 43 cents to $79.41 a barrel, while U.S. West Texas Intermediate crude recouped its earlier losses, rose 33 cents to $76.41 a barrel. Now for commodities update, let's bring in Osike Wajide, research analyst, financial derivatives company. Happy New Year.
Wishing you the same.
And great to have you.
Always
First one for the year.
Yes,
Anyway, how would you, we've seen oil quite volatile in 2021. How would you describe the performance, in 2021?
We saw, I'd go back to as far back as 2020, the year before, and we saw oil prices plunge when the pandemic set in. We saw OPEC do, in quote, whatever it took to revive oil prices. They were successful. They've been somewhat successful, and that had to do with taking away as much as 10 million barrels of oil away from the market. So the market stabilized. We saw oil demand also plunge, which triggered the fall in prices. But in time, as the recovery has continued and also stuttered, we've seen oil prices rise steadily, fall steadily, rise and fall. Rise, obviously more than fall, to reach 86, it peaked at $86 a barrel sometime during the year, but now it's fallen to just under $80 a barrel, and that's thanks to OPEC. Majorly, we have, like the OPEC Secretary General pointed out, there's increased threat from non-OPEC sources, non-OPEC supply. We saw the alliance, or a proposed alliance between major oil consumers, the US, China, even Japan, to tap into their strategic reserves just to increase oil supply and taper oil prices, as it's beginning to impact on the price of gasoline, which impacts obviously inflation, which could impact on economic recovery across the global economic recovery, not just the recovery in this.
And it was quite dramatic, you know, with the U.S. trying to trying to control prices.
Obviously, with the threats that they would reach into the strategic reserves, it was supposed to make OPEC react, but OPEC didn't react and said, you know, I'll call your bluff. Do whatever you think you can. How much reserves do you think you have, and how much impact would that have in the market? But obviously, it's not had that much. It's not had any significant impact. Oil prices are. We saw the impact of the Omicron virus. It's been short-lived, so to speak, and oil is back, fell to around 70. Now it's back just under 80. So in the coming weeks, obviously there's the meeting today where we see OPEC is expected to continue with its output plan. It took 10 million barrels off the market in July, and resolved that from August through to July this year, it's going to steadily increase production by 400,000 barrels a day. So that, obviously, it's taking into cognizance all these other factors: the recovery of the global economy, the increased way countries have dealing with the virus. Countries have improved or have grown accustomed to in a way, living with the virus and just begin to opening up their economies. We've seen that Omicron, the impact has been mild and short-lived, so we expect the economic recovery to continue and increase oil demand, which will absorb this extra 400,000 barrels.
So I guess it's safe to say it was quite a bullish year for oil.
Yes, it was. Yes, it was. Oil started the year at $50-something a barrel, closed the year at just under $80 a barrel. So the average price was somewhere around $70, $71 a barrel.
And I remember in 2021, the first week, it was quite positive for, you know, oil prices. And, you know, fast forward to now, it seems like it's towing the same path.
Yes. I mean, giving all these things I listed before, oil started the year at just around $50 a barrel. And everyone looking to see what OPEC would do, looking to see if they would maintain a united front, which they did. They understood that, look, we have to maintain this united front for the world to take us seriously. And yes, the world has taken them seriously. Markets are always just like every month, markets typically just sit back and wait to see what OPEC resolve, if there will be any alterations to their plans of increasing oil supply by 400,000 barrels a day. And it doesn't look as if that plan is going to change. It's going to continue through to July. At the moment, they have about 3.4 million barrels of oil left, 3.4 million barrels increase left through to July, and we expect to see them to that path.
So is it a positive outlook for 2022?
Yes, we have some outlandish forecasts of over $100 a barrel for 2022. Some more pessimistic, about $60 a barrel. But if we call $60 a barrel a pessimistic outlook, then I think it's safe to say that oil prices will do between 60 and 100, somewhere around $70-$80 a barrel. So it's a win for countries like Nigeria.
Okay, so the OPEC Plus, you know, will be having a new face come, I think, August, Haitham Al-Ghais. How is it going to impact the market, you know, having this new man?
The Secretary General is more of a ceremonial head. It's safe to say it's more of a ceremonial head. For the past 6 years, it's been the Nigerian. It's basically the Nigerian representative leading the face of OPEC.
Right.
So it's not OPEC Plus now, OPEC. And the two biggest players in OPEC, the Saudis and the Iranians. It's more like a gentleman's agreement to have, not to have representatives of those countries leading the alliance. Those countries are at loggerheads politically, and it's always left to the smaller producers within the alliance to field a candidate, and that candidate is then put as the face of OPEC. It doesn't really change direction policy-wise or trajectory-wise as to what OPEC is going to do. The decisions have been made, and we know, okay, Iran is facing sanctions by the US, and when those sanctions, they're in talks about taking away those sanctions. When those sanctions are taken away, Iran's output is going to increase. OPEC would probably need to sit back and recalibrate as to how do we account for this increase in output from Iran. So while that being said, Saudi Arabia and the Iranians, it would make sense not to have anyone from any of these countries leading the pack, so as not to be seen, so that the other party doesn't see any decision being taken as being biased against it. So
okay,
it's
all right. So well, now bringing it down here, seeing price of PMS, there's a lot of talk about subsidy removal, for 2022, and the prices of oil actually have an impact on that. So what's the outlook for PMS in Nigeria?
Depending on when the subsidy removal actually occurs, as talked about, it's happening as early as February, and the Labour is talking about going on strike to prevent it from happening. It's talked about by the end of H1. Higher oil, at this point in time, OPEC is, the NNPC is already paying huge amounts of subsidy. So higher oil prices mean higher amounts being paid in subsidy. Don't forget, we now have an official, albeit for the time being, have an official exchange rate that's depreciated by 20 naira. So basically, NNPC bringing in the exchange rate used to bring in PMS before was 410, 415. Now it's 435. So we have a higher price. So so it's either the NNPC absorbs that higher price or it's passed on to the consumer. So if you have a higher oil price and a weaker exchange rate, you pay more. The landing cost is higher.
It's higher.
So if that's not passed on, it has to be absorbed by the NNPC, which NNPC plans to become a limited liability company. That it's not very positive for its books. So, and given that you want to have more money, government needs to have more money to carry out its infrastructure plans and all whatnot. It already has plans to give out 5,000 naira in palliatives to the poorest Nigerians as some sort of transport palliative. So while that's at the moment, the calculations almost offset each other. The plans to pay out 5,000 naira to 40 million, and the expected gains from the subsidy removal, at the moment, they basically offset each other.
Right.
So, but with higher oil prices, that math changes. So it will be interesting to see how it plays out. But we know that higher oil prices mean higher subsidy payments for Nigeria.
And talking about foreign exchange, I would say our external buffer rose by about 14.46% in 2021. Was it just the SDRs that contributed to that, or was there more? Okay,
that was the SDR, $3.35 billion. There was the Euro bonds, about $4 billion. And higher oil prices, higher Forex receipts, even if we had lower oil production, that impacted on it. And we also had increased intervention, Forex intervention by the CBN. It would have been obvious, the external reserves position would have been higher, but because of this continued intervention by the CBN to increase Forex supply to the market. So at the moment, it's, the accretion in the market was up till October. From November, we saw a continued decline in the external reserves position. That was because the CBN upped the ante as regards to its intervention in the market. So, but as it is now, because we've had a slight a 20 naira depreciation in the Forex market, what it means is that if you wanted $100 million before, and you had this X amount of naira to buy the $100 million, it's become more expensive. So if we're going to have What it means is that if there's increased supply in the official market, and the dollar is actually more expensive now, you have less demand in the parallel market. So while this is depreciating, the parallel market will appreciate. So because you have less demand in that market, so that's the logic. So it's a gradual movement towards convergence.
Okay. Do we see the trend? You know, this last year we saw it after it got to about 40 billion. We saw that trend of it going down again. What's the outlook for 2022?
It depends on what the CBN plans to do. Is the CBN going to continue with its rates of intervention? Are we seeing any plan by the government to borrow externally? Do we have those huge, like as much as $7 billion that we got from the SDR and the Euro bonds? If we're not going to get that, then we might see the external reserves decline. If intervention continues at current pace, it might decline towards 36, $35 billion, just to give exchange rate stability.
Yes. All right, and the World Bank projecting inflation in Nigeria to be the highest globally this year. Quite scary.
Oh, yes. Basically, a number of things are driving inflation. I mean, even the expectation of subsidy removal, the removal of the subsidies from power, and then of the exchange rate pass-through. Even if we've seen the headline inflation numbers fall for 8 consecutive months on base effects, eventually base effects will wane. And all these exchange rate pass-through, higher logistics costs, higher PMS, price of PMS, all these things will impact on inflation. And even insecurity on food prices, especially in the food-producing parts of the country. Those things with insecurity now, it's not just that last year we've seen a decline in the harvest production in the harvest season. Now, the planting season is at hand. Farmers are afraid to go to the farms to plant. So we might have a crisis on our hands towards what's supposed to be the harvest season in 2022. If the farmers cannot even get to their farms, then they can't plant. If they can't plant, there's nothing to harvest. So inflation might just, it's not looking good for food production towards the middle of the year, and that's something that would affect inflation. So the World Bank has foreseen all of this is going to impact inflation. Inflation as high as even the CBN has came out to say some months ago that inflation above 12% is growth retarding. Its target is 9% inflation. At the moment, we're at 15.4%.
Yeah,
the impact on savings, impact on consumption, it's plunged. The most vulnerable set of Nigerians, it's plunged them into poverty. About 7 million of them. It's going to distort investment, savings, and consumption decisions by governments, individuals, and households in 2022, 2023, if efforts are not made to taper.
Okay. What's the outlook for agricultural, commodities in 2022?
Like I pointed out earlier, insecurity is a major factor. If we cannot plant, we cannot harvest. If we cannot harvest, there's no harvest, basically. So, I mean, while some commodities are grown in the south, where it's a bit relatively more secure, the major staples, I mean, the tomatoes, the pepper, the things that you get from the north, beans, onions, those prices are expected to soar. While the cocoa, the rice, and other commodities that you can plant in the south, those prices, there might be increased demand. So those prices are expected to rise. On the whole, it's not. We're looking at higher agri-commodity prices in 2022.
All right, Nosuke, still early days here. We'll see how everything plays out. Thank you so much for coming on the program. Nosuke Nwajide, research analyst at Financial Derivatives Company. All right, we'll take a moment now. Welcome back. Now to our next conversation. Well, see, global stock markets closed out 2021 with double-digit gains for the third year in a row as easy monetary policy, a flood of fiscal stimulus helped propel an economic recovery from the pandemic. Well, bringing it down here to Nigeria, the equities market was quite positive in 2021. Now let's get an outlook for investment strategies in 2022 with Mr. Ayodeji Ebo, Head Retail Investment at Chapel Hill, Danham. Great to have you. Happy New Year.
Good morning and Happy New Year to you, to
Good morning.
everyone.
Good morning. Well, 2021, quite an interesting, year for markets. But what would be your proposed investment strategy for investors, coming into 2022?
Okay, thanks. I think the first thing for investors to understand is they'll need to first set an objective for themselves. And beyond that, you also need to understand your risk appetite. So once you have those understanding, then you can now craft a portfolio. So in terms of the strategy, we'll be pushing more for investment in corporate issuances because of the low interest rates in the federal government instruments. So for instance, rather than invest much in treasury bills, we can look at commercial papers that come with higher premium. Yes, it carries a bit of higher risk, but you also look at the names of the companies that are issuing it before you also invest. Beyond that, in the earlier segment, you spoke about your FX. So it's also very important for investors to look at their exposure to dollar investments, maybe in the form of dollar mutual funds, US, or I'll say foreign stocks, those with strong fundamentals, as well as Eurobond. This will also help them hedge their investment or their savings against imported inflation, as well as any depreciation or devaluation of the naira. So by and large, investors need to be deliberate. I think I missed out even for the Nigerian stocks. We still know that there are some sectors that we believe that will perform well in 2022, especially you look at the financial services sector, you look at the telecom sector, and the industrial goods sector. We believe that they will still be able to weather the storm, despite that we are in a pre-election year.
All right, you talked about inflation rate, but how can investors reduce the impact on their savings and investment? We see the World Bank, they're projecting, Nigeria's inflation rate will be the highest globally this year.
Okay, thanks. I think one thing that I've noticed based on my frequent interaction with investors is that doing nothing makes you worse off. So you need to also always take that into consideration. So inflation rate as at November is around 15.4% year on year. So rather than leaving your money in your savings account or just leaving it without any interest, it is important that you look for investments that will give you a bit of return to close that gap. So putting that into perspective, use, yes, may be very low. Around 1 year treasury is around 5.4%, but you can is around, let's say, sub 9 or 10%. So if you if you invest in those instruments, or you also look at stocks that give dividend yield of almost up to 10 double-digit dividend yield, so that will bridge the gap. So for investors, the focus should be on how do you want to reduce the impact of inflation on your savings or your investment? Because if you don't invest to even earn 5 or 6%, that 15% will reduce your purchasing power for your savings or for your investments. You have the impact of devaluation, impact of depreciation. So you need to be very deliberate on how you want to hedge yourself against all these potential impact on your savings and investments.
All right, talking about hedging now, what are the options available?
Okay, thanks. So I will start with the dollar investment. It's very important that given the situation in Nigeria, you need to be exposed to dollars. So when I say exposure to dollars, you have the dollar mutual funds that has the entry of between $100 and $1,000. It means you can set aside on a monthly basis or periodically invest in dollar mutual fund. You also have the euro bonds, though that have a very high entry level. For some investment outfit between $50,000 to $200,000. You can also look at US stocks. There are stocks that have been able to weather the storm. You look at their past performance in the last 5 years, and if you don't want to be specific, even investing in stocks, there are ETFs that you can exchange traded funds that tracks different stocks and you can invest in them. Now, coming back to Naira investment, you look at money market investments and fixed income mutual funds. They also give impressive return. And like I mentioned earlier, rather than putting most of your funds in treasury bills, commercial paper, we expect that there will be more corporate insurances in this first quarter, given the low interest rate environment, which is positive for the issuer. So investors should position in those stocks in the first quarter of this year. Beyond that, also looking at equities, there are stocks that when you look at their dividend yield, which is like a pessimistic scenario, minimum you get a dividend, they are almost at 10% dividend yield. So when you also invest in those stocks, it also gives you that potential to reduce the impact. And lastly, the alternative investments. Yes, it's high risk, it requires a lot of due diligence. So you may either want to go in through the mutual fund, there are funds, there are real estate funds, there are infrastructure funds that you can invest in that also delivers above inflation return. You also look at the likes of crypto, though it's currently not allowed in Nigeria, but you can look at different other classes of assets that can help you to hedge against the impact of inflation.
Yeah, talking about crypto, there a lot of people have talked about Bitcoin, being a hedge for inflation, but you know how volatile that market can actually be. But what is the best portfolio mix right now going into 2022?
Okay, thanks. I would first like to state that it differs across investors. Objective differs, risk appetite differ. In terms of the available fund, investment horizon also differ. So you will need to craft or work with your portfolio manager or a professional investment advisor to guide you. But talking generally, the exposure, you should get exposed to money market investments. I would say between 40 to 50%. You can also look at dollar investments, about 30% of your portfolio, and maybe about 20% to equities. Then you can put about 10% to alternative assets because of the high risks that they carry. And beyond that, in terms of the crypto market, when it's really very volatile and investors need to understand the risk involved. Some, if you don't have that time to invest in particular coins, you can also look at the funds or the funds that track those coins. Beyond that, there are potential, based on what the current discussion around the metaverse coins. These are potential coins that has growth for the future. Yeah, this is not like a recommendation, but you also need to carry out your due diligence based on your understanding. But we believe that based on what we've seen in 2021, where we've already seen known companies, top investment banks setting up funds around crypto. So we believe that, at least for now, crypto is here to stay, and there's still potential for growth.
Right, and narrowing down now to fixed income, what's your outlook for the fixed income market, and what should investors be doing in that market?
Okay, thanks. We expect that where the fixed income market interest rates would increase from, let's say, from the second to third quarter of this year. And the reasons are, one, government is expected to, we expect government to front load their borrowing. When you look at the budget, you will see that gap. One major factor that may just be a setback is the liquidity we're expecting in January. It's about over 800 billion naira will mature in January, and that would reduce that impact. But notwithstanding, 2022 is a pre-election year. We expect a lot of volatility, which presents opportunities for traders. And for most retail investors, would propose that most people should focus on identifying commercial papers issued by corporates, known corporates, and they should also be mindful of the rating of those corporates. With the low interest rate environment, corporate issuances should increase this year, so we expect that they should be positioning. Interest rate is expected to increase. We would see maybe before the end of the year, CBN may also want to increase the OMO rate. When you look at last year, what changed again within the fixed income market was the increase in the OMO rate in February from about 5% to about 10.1%. So we expect that with the expected hike in the global space, if that is implemented, then we will see that our CBN would also follow that trend, which would mean that that will be higher interest rate environment. So by and large, investors should keep as much liquidity as possible to take advantage of opportunities as they present themselves.
All right. And on the equities market side, what are your top sectors in 2022, and what strategy do you, recommend for the equities market?
Okay, thanks. The first strategy on the equity market is to look at stocks that have consistent high dividend yield. So when you look at the past 3-4 years, those that have been consistent, you can take position in them. So you also want to look at sectors. So you look at the telecommunication sector. Despite the challenges in 2020 and 2021, they have continued to grow at a very impressive rate. In financial services, yes, we experienced a slowdown in 2021, which I feel will give them a strong lower base to move in 2020 and 2022. So the only downside risk that we see within the equities market is because of the election. And if the high interest rate environment persists, would also reduce interest within the equities market. So we are not significantly overweight in the equities, just identify stocks that has potential for good dividend. And if you also have that long-term perspective, there will be opportunities even as we approach the election. When you see the dip, just take positions with the mindset that maybe next by 2024, when the post is clearer, when we know the new government, the policy direction, then we will begin to see traction in the equities markets.
All right, talking about identifying, good investments, and stocks, the knowledge, investment gap is still very wide. How can this, gap be improved?
Okay, thanks. I think the first thing the investor has that responsibility to search for knowledge. Most people should also see investment as something very.
All right, Mr. Ebo. It seems. All right, Mr. Ebo. It seems that the network is a little shaky there. Well, that was Mr. Ayodeji Ebo, Head Retail Investment at Chapel Hill, Denham. Thank you so much, Mr. Ebo, for coming on the program. Now let's, still more talk about the markets. We have Aniete Edet here. Aniete, how's it looking?
Yes, good morning, Ladi.
Morning.
Well, yeah, officially it's the first trading day for the markets, the financial markets in Nigeria are opening the very first day of 2022 today. And that's, of course, after they all observe the New Year break. Of course, they also had the Christmas break just a couple of days ago. So what I'm just going to give you a review. We had that yesterday, but we'll still do a little bit of highlights of what happened last week. This is the FX market, which we talked about yesterday. This is how it panned out, mostly negative for the FX market, as well as the fixed income market. No, we're still talking about the FX market. Total value at the investors and exporters window was down 57.72%. NAFEX rates 0.81% for the Naira. Naira was down, still down week to date, in contrast to the other week. This is how it turned out. 417 Naira, 65 kobo. We'll see how it turns out at on the start of the trading day today at the FMDQ exchange. And then, of course, talking about the FMDQ exchange, the fixed income market, it was a lackluster performance. We will be having our analyst, Choma Udu, who's a fixed income trader at GT Bank, to talk more about the fixed income market. But once we have her, she'll tell us more, give us an analysis, an overview of that market and also what to expect. So also for the Treasury bills market, it was not an impressive close for 2021. Of course, for that market, it was almost stealing the shine from the fixed income, from the equities market. But towards the tail end of 2021, well, investors had a rethink and pulled out some of their money from that market. Of course, we don't really know. The analysts will tell us once we have her. But still talking about that market, is CBN special bills. Only 2 deals were carried out on the 30th of May 2022 paper at a discount of 5.65%. Now, talking about this market, the market which is very, very popular, it gained 1.21 trillion naira in the whole of 2021, and that in spite of, profit taking having an impact on the market in general, it still managed to outpace Nigeria's economy by 2.04%. So that tells you that this market, the equities market, which is normally called the barometer of a country's economic performance, I think it still is, because it just tells you that, yeah, investors are still having confidence in this equities market. So we gained about 1.21 trillion naira. Month to date, as of December, the losses were moderated to 1.21%. Year to date, 6.07%. Week to date, 1.07%. That's as of last week, 3 trading sessions last week. And then, of course, on Friday, we had 2.11% for that market. Now, I was telling you about the fixed income market. So let's talk to Chioma Udu, who's a fixed income trader at GT Bank. Thank you for joining us, Chioma.
Thank you for having me, and happy New Year.
Yeah, happy New Year. Yeah, happy New Year. That's for you. Okay.
Yeah.
So
I'll start with the bond market. It was a quiet market, mostly bookkeeping on all grounds for the bonds and T-bills. There are really no trade across the curve. We expect the activity to pick up gradually as this is a coupon month. About 220 billion is expected to hit the market by the third week in January. And we expect the market to, pick up with a bullish bias as we see the investment of the coupon. We also have the 2022 bond, which is maturing in January as well. About 605 billion is expected to mature. So that will help support the activity at the long end of the curve. For T-bills, it was a quiet market with no activity. The liquidity in the market, no activity basically. We expect resume bullish trend. As we've seen liquidity come in, we have about 17 billion maturing from OMO. And we expect that most of the interest will be on the special bills, which is trading at about 5.6%. That's all for fixed income for now.
Okay, so but do you have a crystal ball, which can tell us the future of the fixed income market, especially when we're starting the 2022 this month? So what's your expectation for the fixed income market?
Well, for us, from what I've said, we've seen liquidity. They're going to come into the market on 212 billion from the coupon, and then about 605 billion is going to mature for the bond. So we expect that it's going to be basically a bullish trend, and we expect that rates are going to trade at the same level for the T-bills around 5%, because if you notice the last NTD auction, it closed at 4.9% discount. So we expect that trades are going to, going to happen at that level for at least for the first quarter. And then for the bond market, we're going to see reinvestment. So the rates for the T-bills about 5% and the bond 12% to 13%. That's what we think.
Okay, thank you for that analysis, Choma. And definitely we will keep our eyes out for the fixed income market. So that was Choma Udu, fixed income trade, the chief dealer, fixed income at GT Bank. So Ladi, for the market, I would have told you about the smaller unlisted securities market. It's closed positive, but we keep our eyes out for all of the markets, fixed income, equities, FX, and what have you.
Yeah, well, fingers crossed for today's close. I'll be watching out for that one. Thank you so much, Anita.
You're welcome.
All right, we'll take another quick break now. When we come back, we head to London. Do stay with us. This is Business Morning. Welcome back. Now for updates from London, we have Juliana Olaika. Great to have you, Juliana. Happy New Year.
Happy New Year, laddie. Nice to see you.
Nice to see you again. Well, UK government is extending powers to intervene in foreign takeovers, in a move that will give ministers more scope to unpick acquisitions. Tell us more about the new rules.
Yeah, this is a pretty significant story. I think the British government have described it as the biggest shake-up to national security in about 2 decades, and it's all about the National Security and Investment Act. This was kind of pitted early last year so that the British government can have more control over foreign investors taking over British companies across 17 sectors, most notably artificial intelligence, nuclear defence, and cyber technology. I think one of the biggest business deals, really most notable, is the NVIDIA, the US firm's takeover of ARM, which is a world-leading chip designer owned by Japan's SoftBank, but headquartered here in the United Kingdom. Now, that's currently under probes across many countries in the world, including the EU, America, and, of course, in Britain. So now this is what the British government will do. I believe if you want to take over a stake at 3 pricing points, 25%, 50%, and 75%, the British government will intervene. I got a statement here from Kwasi Kwarteng, the business secretary. He said the UK is world-renowned and as an attractive place to invest, but we've always been clear that we will not hesitate to step in where necessary to protect our national security. He goes on to say the new investment screening process in place from today is simple and quick, giving investors and firms the certainty they need to do business and giving everyone in the UK the peace of mind that their security remains our #1 priority. Pretty important piece of news in this kind of supply shortage era that we found ourselves in.
Chris is all about national security there. But talking about rising prices, we see shop prices climbed at the fastest rate for nearly 3 years last month. It appears Christmas became a little more expensive.
It did become a little bit more expensive, as revealed by the British Retail Consortium. They've released data today showing that in the month of December, prices rose 0.8%. So it was a little bit more difficult to have your turkey for your Christmas dinner. There's lots of reasons why. I think the main push is because of labour shortages, supply chain disruption. I think in the summer and in the 3rd quarter of the year, retailers were absorbing those prices, but they're not now. They are starting to trickle down to consumer. I think most people in the UK now, if you're going to buy a coffee or you're going to buy a sandwich, you can see that prices are significantly rising. We know that inflation is running at a 10-year high, and unfortunately, according to most of the notable think tanks, we can expect more of the same, particularly as we come towards April, when we are going to see that major rise from the Ofgem energy regulator, which is definitely going to affect inflation, could reach about 6%.
Quite interesting times, Juliana. All right, thank you so much. Enjoy the rest of your day.
Thanks, Laddie.
All right, now let's take a look at what's happening in the crypto market. We see Bitcoin started a fresh decline after it failed to clear the 48,000 resistance level. We see the market cap there, $2.21 trillion, down 1.25%, but having more volume this morning in the total crypto market. Bitcoin dominance at 39.57%. See price of Bitcoin there, $46,366. It's down 1.28%. More volume based on sell-offs. Ethereum is looking far away from the $4,000 mark now at 3,755. It's down 1.24%. See the bulls struggling to keep Ethereum back above 4,000. And top odds by market cap, it's all red there with BNB there, $510. It's down 2.64%. Cardano, $1.31, down 2.62%. And we see Solana as the biggest downer on that counter, $168. It's lost about 3% of its price. And XRP still ranging that 80 cents level, down 2.30%. All right, let's bring in Rume Ofi now, digital market analyst. Great to have you, Rume. Happy New Year, Rume.
Happy New Year, Adi, and Nigerians too.
Yeah. So 13 years since the Bitcoin's first block was actually mined by Satoshi Nakamoto. Tell us about the significance of this.
All right, so it's been 13 years. Bitcoin has been stronger. That's where the first block was mined. Satoshi Nakamoto is the anonymous creator of Bitcoin. He actually did that in January 13, 2009, after a financial meltdown in 2008. And since then, it stands as an alternative finance, if you ask me. A whole lot of people are coming in, a whole lot of new development in terms of people looking at ways they could hedge their funds away from all of these printing currency here and there and inflation. And also, what also happened yesterday that needs to be also worthy to note is the fact that the hash rate that actually dropped because of the China blanket ban that dropped to about 58.46 EH/s actually has increased. That is, as a hash per second has actually increased to 207.53. It has never been before, so it actually correlated with the birthday, the 13th birthday. So this is a technology that I think it's worthy of note. People need to give it research, very due diligence, because quoting the words of Jeremy Sage, the Wharton finance professor, he said that Bitcoin is the gold for millennials. That is, it doesn't have to be some of these old people, it's for young people, because then in the 70s, when gold actually surged massively because of a lot of economic mishappening. So now it's going to be Bitcoin and other cryptocurrencies. It's a welcome development, and I think the best is yet to come.
Okay, well, 2021, quite a good year for the crypto industry, but we see jurisdiction banning has more than doubled since 2018. What are you seeing for 2022 and beyond?
I think 2021, the banning, I think it went across board. When I looked at the list, I felt like, wow, it's a result of knowledge gap, if you ask me, because most of these countries were Africa. I don't know why. Egypt is there, Morocco is there, Algeria is there, and Tunisia is there. So it's just more like all of the North African countries. I actually gave Bitcoin a blanket ban. I don't want to mention China because it's out of the continent, and some countries like Qatar and Iraq. So that of Iraq is also somehow because their neighbors are actually mining Bitcoin heavily. So, but I think this year, 2022, is going to be more of structuring for framework around cryptocurrencies. There's going to be a lot of roundtable discussions on how we can manage all of these things, because it's also very important that those involved in digital assets to note that it has its own, this whole technology has a direct effect on the local currency and the local economy. Quite all right, it's decentralized, it's good, but also we need to also consider the fact that if we do certain things, our currency, our economy is going to really badly affected. It's not about just making money now. Some people are just focused on, we understand that in the white paper is an alternative finance, that is away from traditional system, but we also need to put into place how it affects us in our own local currency.
Right.
So 2022 is going to be discussed very well for framework, and I believe a lot is going to be done. And I also think that central bank is going to come up with certain things in relation to what they've actually said in previous times.
All right, well, let's look at price action now. We see Bitcoin still, struggling under the $50,000 psychological level. It's not looking pretty in the market. We see double-digit losses with, a couple of altcoins, but other altcoins are looking good. What's your view?
Bloody, I must tell you for a fact that the market is not having a direction now. I must be sincere with you. For the past couple of weeks, the market is not having a direct direction. And if you check the daily and the weekly, you'll see that it's still maintaining a very healthy position, but the volumes are actually decreasing. I won't be surprised if you see more market reset. There's blood on the street. It's going to also position us for a bigger movement. We were just talking about a few things the other day, and I think yesterday there's this news about one of the banks in Italy. Is $87 billion bank actually coming to see they're going to give exposure to their customers to have wallets and transact Bitcoin. Banker generally, it means that people are actually getting involved despite the fact that they are not certain. So after now, I think the market needs to really reset, and a lot of leverages are up there. People are leveraging with taking collaterals to place bets on the market, either up or down. I think it's actually something that is really affecting the market right about now. But I think when there's a reset, everybody can put in the funds for it to go up.
All right, Rume, I guess we'll wait for direction. Thank you so much, Rume.
Thank you very much, Daddy.
Yeah, that was Rume, digital market analyst. Well, back to the top gainers there. We see Near Protocol leading that count is up about 19.31%, and RVN also up about 18.69%. And Phantom still, pushing strong there, trying to get above that $3 mark. It's up 17.38%. Phantom has had an incredible year in 2021. See VLX there, 13.91%, and Atom up 13.07%. See the top losers there. We see Sushi Swap there. It's down 9.77% at $8.20. Engine, one of the metaverse tokens there, down 5.62%. Yield Finance, $38,000, down 5.46%. And Cadena, down 5% at $11.27. A lot of traders there talking about Cadena recently. And AVAX, $106, down 4.62%. All right, and that's a wrap on the program today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates on developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.